If you check the markets today, you may have noticed something unusual. Bitcoin was trending, Amazon stock was trending, and XRP suddenly entered the conversation as well. At first glance, these don't appear to be related. One is a cryptocurrency, one is one of the largest companies in the world, and one is an alternative digital asset that often sits quietly in the background. But they started trending at the same time for a reason: timing. Here's the context. Markets. Attention is shifting. Over the past 24 hours, search interest related to financial markets increased sharply across the United States. This wasn't driven by a single breaking headline or one dramatic market move. Instead, it was driven by people checking in. When markets trend this way, it usually means something subtle has changed. Not enough to cause panic, not enough to dominate headlines, but enough to break routine. Not people who weren't watching prices yesterday started watching today, and that shift matters. Let's begin with Bitcoin. Bitcoin. Why people checked today. Bitcoin trends for many reasons, but most of the time it's not because of a sudden spike or crash. It trends when people sense momentum building, either upward or downward, and want to understand what's happening before it becomes obvious. Today, people weren't just searching for the price. They were searching for explanations. That's an important distinction. When people only care about price, it usually means speculation. When they start looking for reasons, it means they're trying to understand context. Bitcoin reached a level where it demanded attention, not excitement, not fear, just attention. This kind of movement often happens when Bitcoin has been quiet for long enough that people stop checking regularly. Then, when it moves outside that comfortable range, even slightly, people return to see what they missed. Bitcoin acts as a signal. When it trends, it pulls attention back to the broader idea of money, risk, and positioning. And that's where the story expands beyond crypto. Amazon. Why a stable stock trended. Amazon trends for very different reasons. It's not speculative, it's not volatile, and it's not exciting in the way crypto often is. Amazon represents stability. When people search for Amazon stock, they're usually not chasing gains. They're checking reassurance. This typically happens during moments of uncertainty. When markets feel unclear, people look toward large established companies to understand how stable the ground really is. Amazon is one of those reference points. If Amazon looks steady, people feel calmer. If Amazon moves noticeably, people pay attention. Today, Amazon stock trending alongside Bitcoin suggests something important. It suggests that market attention wasn't focused on one direction. People weren't all chasing risk, and they weren't all hiding from it either. They were checking both. That combination tells us the market is in a thinking phase, not a reacting phase. People are reassessing, not rushing. XRP. Why alternative assets followed. Now let's talk about XRP. XRP tends to trend when attention spills over from Bitcoin into the rest of the crypto space. This doesn't always mean something specific happened with XRP itself. Often, it means people are widening their view. When Bitcoin brings attention back to crypto, people naturally start asking what else is moving, what else exists, and where money might go next. XRP benefits from this because it sits in a familiar but secondary position. It's well known enough to be recognized, but distant enough from Bitcoin to feel like an alternative. Today's XRP searches weren't driven by hype. They were driven by reassessment. People weren't asking how high it could go. They were asking why it was being mentioned again. That's a very different type of interest. What connects all three? So what connects Bitcoin, Amazon, and XRP trending together? It's not a single event. It's not a coordinated move. And it's not a prediction. It's attention. Markets move in cycles of attention. For long stretches, people ignore prices completely. Then something shifts, often quietly, and attention returns. That's what happened today. Bitcoin represented curiosity. Amazon represented stability. XRP represented alternative positioning. Different assets. Same moment. Why this matters. When attention returns to markets, it doesn't mean something dramatic is about to happen, but it does mean people are preparing. They're checking, they're recalibrating, they're re-entering the conversation. This usually happens before larger moves, not after. Attention is the first stage. Then comes discussion, then positioning, then action. We're still early in that process. Broader context. There's also a wider backdrop to consider. Interest rates, inflation expectations, earnings reports, and global economic signals all sit quietly behind the scenes. They don't trend every day, but they influence how people behave. When enough of those signals align, people react in subtle ways. They check prices, they search, they pay attention. And that doesn't mean fear, and it doesn't mean optimism. It means awareness. What search trends really show? Search trends don't tell us what will happen next, but they do tell us what people are thinking about right now. And today, people were thinking about money. They weren't panicking, they weren't celebrating. They were checking. That's an important moment, because markets don't move on emotion alone. They move when attention shifts. Closing: Bitcoin, Amazon, XRP. 3 very different assets. Trending at the same time, for the same underlying reason: timing. As this pattern continues, you'll likely see similar combinations appear again. Different assets, same cycle of attention. When they do, we'll break down the context, not the noise, right here